Good afternoon and welcome to this webinar. Today I'm going to talk about implementing risk management on the Crossrail program particularly through the development and civil delivery phases. So as you're probably aware, this webinar is part of Crossrail's program of Learning Legacy. This is a significant project in itself, and it's aimed at collating and disseminating good practice, lessons learned and innovation from our Crossrail program, really to help other projects that are following on behind us to raise the bar and add to our overall best practice in delivering projects like this. There are 12 themes, and this webinar forms part of the projects and program management theme. There is a wealth of information on the Learning Legacy website which you can go and find afterwards, and these webinars are also published up there as well. So this risk management piece is part of the program controls theme. It is the fifth of a series of 7 themes. So a little bit about what is Crossrail. I guess most people probably have heard of the project, which is a new railway for London and the South East. Early this year it was announced that it would be going to service as the Elizabeth line, and it will run 100 kilometres from the east of London to the west. And it's really a new kind of service for the UK. It is mainline rolling stock, sort of full-size trains running at a metro frequency, 24 trains per hour in each direction. And really the combination of large trains and a high frequency give us that figure of more than 200 million passenger journeys per annum, which is a significant increase on London's rail capacity, around 10% when Crossrail is fully complete. It'll be a 10% increase to what we have currently. We are, I think, still Europe's largest infrastructure project currently being delivered. There are some other big infrastructure projects following behind, but £14.8 billion funding is a significant enterprise. Crossrail will serve 38 stations across its line, of which 9 of those stations are complete new builds across the centre of the city. Though we have built 42 kilometres of new tunnels, which is again across the centre of the city. That's produced 8 million cubic metres of spoil, and all of this has been done under the sort of cover of the Crossrail bill, which has included over 4,000 parliamentary commitments to stakeholders along the line of route. So all of that work has been done in considering the commitments that have been made to various people and interest parties along the route. Just got a couple of graphics about the route itself. It's possibly a bit small for you to read, but Crossrail will run from Reading in the west to Shenfield in Essex on the northeast, and to Abbey Wood in North Kent in the southeast. The pink sections on that top graphic, as you can see them, are the tunnel sections. There is Crossrail will use the existing tunnels into Heathrow, but the pink section across the centre of London is the new section that has been built. And the graphic to the bottom half of the slide shows the interfaces with other transport networks, particularly London Underground and existing National Rail, and it really shows the sort of proximity that we've been working with existing infrastructure across the central section and the interfaces we've had to create to existing London Underground assets across the route. I could put a timeline here about the timeline of the program, and it really goes to show how long major projects like Crossrail are in their planning and development. Crossrail was first talked about in 1989 when the Central London Rail Study proposed 3 different lines. The Crossrail, which was the east-west line, the Chelsea-Hackney line, which is now being proposed as Crossrail 2, and the Jubilee Line extension, which London Underground completed around 2000. So it's really been 20 years in the planning up to the point in 2009 when the program sort of completed its delivery phase and really completed its development phase, and went into delivery. And really most of my slides talk to the post-2009, going into the delivery phase and mobilising the organisation to go and deliver this major project. Crossrail is a big project, and there are some big numbers which summarise it. We've talked about around £15 billion worth of funding. The project is projected to deliver £42 billion of economic benefit to the UK economy, and that was the original basis of the business case that the project was initiated on. Over the life of the project, around 14,000 people have been employed. And the sort of bottom right figure there talks to the sort of broader benefits in terms of to the economy and accelerating the sort of property development in and around the areas that Crossrail serves. So Crossrail accelerate the supply of 57,000 homes and 3.25 million square meters of commercial space. And this is a sort of a feature that big infrastructure projects that come on after Crossrail will seek to kind of take advantage of. So just going back to the contents, we talk a little bit about defining risk. I think it's quite useful just to understand what it is that we're talking about here. We use a project risk definition. Risk is defined as an uncertain event or set of circumstances that could affect one or more of our objectives. And examples clearly for a project like Crossrail are catastrophic tunnel collapse, because we're doing an awful lot of tunnelling under the centre of one of the world's major cities, but also things like contractor insolvency, schedule coordination across interfaces, and I think Rob Little talked in his planning piece about the extensive work that's gone on in terms of managing interfaces across the programme, and just fundamentally the uncertainty of quantities and rates that on a project that's been in development for such a long time as Crossrail has, and takes such a long time from getting the funding to actually delivering. There's an awful lot of design and development goes on, and just the fundamental costs of the project are subject to change over its life. So there's a range of different categories of risk that we've been looking for. And I think I just wanted to make it clear that these risks are real. In 2009, when I first started here at Crossrail, the UK had a pretty poor record of delivering major projects, and one of the worst sort of examples of that was the Scottish Parliament building, which was originally projected to cost around £40 million and ended up going 10 times over its cost at just over £400 million. And I think that's one of a number of examples of major projects in the UK and around the world, really, where big projects were very risky, and we had problems in delivering them and getting them to cost and schedule. But also a project like Crossrail has obviously got its own specific risks. This was an example just around 2009 when the project went into its delivery phase and started mobilising up, and an example from Cologne in Germany when a tunnelling project for the metro there in Cologne had a catastrophic collapse, and the city lost its archive building, a significant building containing the city's archives from hundreds of years was lost when it collapsed as I say, as a result of the metro work. That was a big story at the time, and was a big impact to the city. I think it was a €400 million impact to the city as an insurance claim, and obviously it affected the project that was delivering. So that was a significant event that happened around the time we were setting up Crossrail, and was really focused our minds in terms of managing risk. But this sort of thing is still happening. This is 5 years later. Mass Transit Railway of Hong Kong delivering again a very similar project to Crossrail, where a flood damaged the tunnel boring machine that they were using and effectively knocked that out, resulting in 2 years delay to their project. This is an organisation that has an excellent record in delivering big projects in and around Hong Kong, and was sort of hit by this significant risk on their project. So these risks are real, and I think, you know, I've used these examples all the way through my time at Crossrail just to make sure that people are focused on, you know, always thinking about risk and taking action to manage it. So going back to the timeline, I said that my time at Crossrail was predominantly post 2009, But there was some significant and really good work done in risk management in the development phase prior to 2009. Particularly, three areas I've kind of highlighted here. One was in a kind of strategic risk capacity, and quite a lot of strategic thinking done in those early stages of the project to understand different perspectives of the different stakeholders involved in this project. As you can imagine, a project like Crossrail, with all the interfaces and interests from London and the whole of the South East, has an enormous amount of stakeholders and a lot of focus on that. So there was a really good exercise done in terms of understanding stakeholder perspectives, and that really fed into determining the project governance that we ended up delivering the project with. So an exercise going, and you can probably see on the slide there the different organisations: Treasury, DFT, Transport for London, Crossrail itself, Network Rail, and other organisations, and really understanding the risks that Crossrail presented to each of those organisations in order to develop a governance that sort of was fit for purpose for delivering the project. I'm going to come to the bottom right section now, which is really the sort of control of risk and uncertainty. This is risk, the sort of traditional risk management, but happening through the development phase. And Crossrail engaged a number of multidisciplinary design consultants. The scope and scale of this project meant that that a lot of organisations were involved in the design and development activity, and risk management was a key part in how those organisations developed their designs and progressed the project. And you can imagine a design process is all about managing uncertainty, identifying uncertainty, dealing with it, managing risk, and the risk management process was sort of well embedded in that process. And then moving to the bottom left, quantitative risk again formed a key part of those early stages. Crossrail was quite unique in departing from government guidance in the use of optimism bias. It was quite unique in actually developing bottom-up and detailed quantitative risk assessments in order to understand the level of uncertainty and risk. It was also, in my experience, quite unique in involving the sponsors, organisations in that exercise, so that the sponsors and the funders understood the risks that related to the project and understood the scale of contingency that was therefore required. And we all know and hear about the significant levels of contingency needed on these big projects. But I think involving the sponsors was a key win for Crossrail, so they understood why these high percentages of contingency were needed at the early stages of the project. And this really fed then this good understanding of risk and quantifying the risk fed into the application for funding. It informed specific technical decisions, and it also informed some of the key aspects of governance of the project. One of them was that the management of risk exposure was really contractualized in the project delivery agreement. This is the agreement between the Crossrail Limited organisation and its joint sponsors, Transport for London and Department for Transport. And really the QRA informed what we call intervention points. And these are intervention points which the sponsors hold and are able to monitor the project's organisation in terms of managing its cost. And they give a kind of early warning really to the sponsors of cost escalation and cost pressure in order to avoid the kind of experience that, as I said already, major projects had prior to 2009, and particularly Scottish Parliament, really give sponsors an early warning and a way of measuring the likely outturn or the risk that the likely outturn may increase. And so there were three intervention points, which again, as I say, put into the contract that we have with our sponsors, which for me really gave a strong basis for implementing risk management into our organisation in order to support and protect the project cost. So that was the early stage, as I say, in the development stages. my story really starts after that and implementing risk management on the project. And really, for all the reasons I've described above, I enjoyed tremendous support and tremendous engagement from the top team here at Crossrail, from the executive and the board. The quote there is from Andrew Wolstenholme, who is our chief executive, and really that gave us a good tone from the top, which you will know is critical to actually getting the rest of the organisation to engage with and embed risk management. So that has been a really good support. We've had a really good engagement, as I say, from the executive and from the board, and really gave us a strong basis to implement formal risk management across the project. From an early stage, really, in 2009, we recognised that risk management on a project like this has a number of different drivers. Clearly, Crossrail is an engineering-driven project, and as I've already said, the design and development and engineering process is itself a process of mitigating uncertainty and risk. And so we have had close and very good support from the engineering teams and we've helped them monitor the mitigation of risk through design, and really to make sure that the assets that are delivered safely and the outputs fit for purpose. Moving across to the top right then, also the commercial team are very interested in the risk management process to ensure that commercial exposure of the organisation is understood, and that the allocation of risk into the supply chain, or between the stakeholders first and foremost, and then across the supply chain, is first of all well understood and then appropriate and efficient. And so very good support and very strong interest from the commercial part of the organisation to make sure that our risks were understood as we went through the procurement process. Going to the bottom left, clearly managing risk is important to the delivery function. It allows us to avoid nasty surprises. It also gives us opportunities to improve, and it really helps people, those accountable for delivering, to head off issues before they impact, and really help those accountable for delivering to achieve their objectives. So we really sort of put ourselves very firmly as a support for the delivery teams. And then the bottom right segment there is about finance. Inevitably, and as we've already said, projects like Crossrail have significant levels of uncertainty at risk at their outset, and that inevitably forms a key part of the cost that is the forecast that is determined at the early stage. And risk and quantitative risk techniques can allow finance to understand the true exposure to risk and uncertainty, and also to help support investment decisions, either to mitigate risk or look at what the risks or opportunities are in making certain decisions and changing certain plans. All those were drivers really on the risk process and risk. And I think one of the successes we had at Crossrail was putting in place a risk management process that was able to support all of those different functions and all those different parts of the organisation, and really give them a process that they could get what they wanted out of it. And I think, so put risk in the middle of that, and I think that's quite a key thing. It also gave us our mission statement, if you like, as far as a risk management function, and that's at the bottom. Risk management at Crossrail was there to support delivery, provide assurance, and inform decision making. And we put those in that order primarily. If we were not supporting delivery, we would not get the engagement that we wanted, that would then provide assurance to those people that need assurance. And having that engagement allowed us to be in a position to help people make those critical decisions and really add value to the project. So those three things on the bottom really formed our, as I say, mission statement as a risk management function. So I've just got a little timeline. I feel very lucky really to have started at Crossrail in 2009 at a point when the program was mobilizing, when we were setting up our systems, processes, and frameworks that was going to deliver the sort of the bulk of the project delivery. And so this slide really talks to the process that we went through to develop risk management, starting off with a strategy, putting in place policy, plan and procedure, and all those good documents and structures that you need to define how you're going to manage risk and how it's going to relate to the rest of the project. We also implemented ARM at the end of 2009 and the beginning of 2010, and ARM is a risk management database. It's now a SWORD product, but that we'll come back to later. And we also put in place risk reporting. Quantitative risk, as I've already said, is a key part of how we supported the projects, and that was implemented across all the projects in 2011. And then we extended risk management into the supply chain. There's quite a lot of process measurements, some of which we'll talk about now, but some of which will come up in some of the later webinars around sort of performance assurance and commercial assurance, and then sort of really keeping on top of training and keeping on top of putting the message out throughout the rest of the delivery phase. So that really is a picture about how we implemented risk management. This is just a picture of a risk hierarchy, and it's something that is pretty standard and something that you would expect on a major project like ours. I think for me the key parts are that the risk hierarchy in the middle relates to the organizational hierarchy, which is on the left-hand side. And for me the key thing about this risk hierarchy is it allows the different parts of the organization to engage in the risk process at the point that they can actually make a difference, while the certain members of our board who may have been interested in some of the detail around station construction, we really tried to get them engaged at the strategic level, looking at the political and economic and sort of high-level risks, and then tried to get everybody at the different parts of the organization engaged in risk, in managing risk at the level that they could influence. But having said that, obviously with an escalation path, which is on the right-hand side, to escalate as that was appropriate. But really it's about trying to sort of box off risks and get the organisation looking at the right things and doing that, putting the effort in to manage the risks at the right level. As we've already said, tunnelling is a key part of the Crossrail project, and we have, I think, probably an unprecedented amount of tunnelling on this project than what has gone before. Two types of tunnelling: running tunnels, which the trains will travel in, and those were typically constructed using boring machines, tunnel boring machines, and station tunnels, which are constructed using a technique called spray concrete lining. Clearly key areas of risk to the project, but areas of risk that were well managed. We had a key document which was supporting us in implementing risk management across the program, which was the Joint Code of Practice for Tunnelling Works, which was ABI document, insurance-led, and that really gave us a very strong mandate to push risk management and to push it into the organisations and also into our supply chain and make sure that they actually engage with the process. Risk registers, I mean, ultimately, at the end of the day, we had what I think is a very standard risk process, but I would say that we implemented it well, and we got good engagement from the organisation for all the reasons that I've said before. Standard risk register formats used across the project, those drive consistency of language, they allow people to recognise the document and to read the document and to understand what they're getting out of the document, and sort of lowers the barriers really for people getting engaged in the risk process. One of the key things that we did was that all these documents were produced directly out of our risk management database, ARM, and that really lowered the sort of level of post-processing that was done, and we did try at all times to make sure that the systems were taking the strain, and that the people we had on the ground managing risk were able to work with the teams and spend their time working with the teams rather than working with the data. Included risk management, risk reporting into all of our major reports at the project level, area level and program level, and this really made it integral to the reports, and again all the information came directly out of the systems and all the reports came directly out of the systems, which I think was again a good bit of progress that we made. And all of the reports focused not just on the key risks, although that was obviously part of it, and that was the opportunity really for the accountable manager for each area to report their risks and what they were doing about them, and to really give a good level of detail on the risk management activity. But it also actually, at the bottom section, it talked about performance as well in their area, risk management performance. This was generally taking information out of the risk management database, but it did allow us to focus on those areas where we were not getting good engagement, we were not getting good performance, and it put it sort of front and center in the report that the account manager then had to take responsibility for making sure that their area was actually engaging with the process. Again, all of this produced out of ARM. Talked already a bit about the engagement from the executive and the Crossrail board. I kind of think that that's natural at the beginning of a project, especially a project like Crossrail, which clearly carried some significant uncertainties and risks. I think one of the things we did well here was to keep that engagement going all the way through the main delivery phases. And one of the ways we did that was to have a strong strategic risk management process. We had really good engagement. We reviewed, we had a set of strategic risks, between 10 and 15 strategic risks at any time, so we worked hard to keep that quite focused, and we drafted those risks, or we managed those risks at a level where the executive and board could engage and could add value. We also kind of shook it up a little bit with some exercises on extreme risks, and also some horizon scanning, which on a 6-monthly basis we looked beyond the program, we looked outside of the program into the future, into the future phases, which perhaps we're not getting quite as much attention, but also around us to other external influences which may present risks. So we shook it up a little bit, as I say, with sort of those exercises. And as I say, we had really good engagement right from the start with the exec and the board, and we maintained that all the way through the main delivery phases. We also extended risk management into the supply chain. This is really a rep at the sort of size and nature of the Crossrail program, made it really imperative that our supply chain manage the risks. I mean, in many cases, they had the key accountabilities really for manage those risks, particularly in the tunnelling activities. So it's really important that we extended our focus on risk management into their organisations. We did that through putting into their contract works information some explicit requirements to manage risk in a way that was consistent with the way that we were talking about risk and managing risk. And it's important just to get common and the process common, because there are lots, although risk management is very much fundamentally a simple process, there are many sort of different flavours and varieties. So we felt it was important to mandate an approach through works information. And we also put in place performance assurance to manage and to assess their performance. And we did all this around our risk database. We invited our supply chain, our tier 1 contractors, into our risk management database, and we supported their use of it to give us that, as I say, that common approach, give us that that insight into what their risks were and what they were doing to manage it. And all of this, as we've already said, was around our active risk manager, our risk management database. We also did some really good work, however, in bringing the information out of the database. ARM, like most specialist software tools, is not the easiest to navigate for the non-specialist. And we got account managers, we got project managers, and various other people saying they couldn't access their risks, the risks that they owned in the system. So we developed a tool called Crossrail My Risks, which really brought the risk information out onto Crossrail's intranet, and it really brought account managers basically within one click of their risk information. It was as I say, an intranet front end to the risk management database, and it provided really very good and easy access to risk information, and effectively for me took away a level of complication and if we're going to be honest, excuses from people who should have been managing their risks to say that they didn't know what their risks were. It basically brought it right onto their desktop. As I've already said, we did quite a lot of measurement of the process, and one of the sort of innovations we made was the key risks process. This was in response to a risk management requiring a KPI. So essentially what we did on an annual basis in response to the sort of performance year, here at Crossrail runs from April to March, so sort of effectively a financial year. We identified for each year 100 risks across the organisation from a set probably of 2,500, 3,000 risks which we were holding in ARM. We asked account managers to identify risks in their area to a total of about 100 risks, and we monitored the successful mitigation of those. Anybody who's sort of been involved in risk management will know that typically you assess or risk owners assess a current position and a forecast position, And we really held people accountable to deliver to those over the performance year. It was only a small set of the risks that were in the database, but it really changed the nature of the conversation with the delivery teams, and it changed the conversation not to people identifying more risks and adjusting the assessments and adjusting the wording, but it changed the conversation to how do I close this risk out? How do I assure myself and others that I've actually done what I need to manage this risk? So a very good sort of focus on the risk management activity. So that was something we were very positive about. And then also, as I've already said and alluded to before, we made quite extensive use of the data held in ARM, in Active Risk Manager, to monitor performance in risk management across the organisation. Important to note that managing the database is not managing risk, but it gave us a very good, I think, a very good indicator on the performance of risk management across the organisation. But fundamentally, and this is a slide that I always sort of include in any of my presentations, fundamentally risk management as a process is very simple. It is all about identifying and assessing and responding to uncertainties that matter. And however much we complicate it with databases, models, systems and tools, it is ultimately about trying to get people to think ahead, think what risks they may be facing, and to then prioritize where they can make a difference and then respond and take some action. Crossrail, although it's a big organization, is essentially we treated it as a big project for the risk management process. We applied tools that are familiar to projects across the board, QRA tools particularly on schedule risk and cost risk, and we embedded this right across the organization. As I've already said, the intervention points were linked to the overall Crossrail performance, but we flowed this down into individual projects to make project managers accountable for their P50, their QRA included in the project costs, and also their schedule risk. This process started as part of the procurement exercise. So as I've already said, the commercial team very interested to know what were the risks we were transferring into the supply chain, what were the residual risks, and that was all sort of generated through a QRA process that started on each contract at the invitation to tender stage, and also repeated then prior to award. And that behaviour around each of the contracts then was played on throughout the contract life, and projects monitored against their P50, and that was a part of the building block into our overall cost picture. And as I said, Crossrail AFC and cumulative probability curves were reported to our sponsors, and really the sponsors engaged very closely in our QRA, both on cost and schedule, and continue to do to this day. A little bit about schedule risk assessment, essentially carried out on blockades, and this is something that would be familiar to those of you who work in the railway industry or any other industry which has sort of critical shutdowns. We did some detailed quantitative schedule risk assessments to give confidence really that the work can be delivered within that shutdown. And we also sort of escalate that process into projects and then to the programme as a whole. And every 6 months we do a QSRA to give the sponsors the confidence that we're able to deliver on time and open the railway on time. So before we wrap up, I've said that risk management did 3 things: support delivery, provide assurance, and inform decision making. And in the assurance area, risk management really we saw as one of in a sense of 3 lines of defence. I think this will be familiar with most people as an assurance model. Essentially, the first line is self-assurance that is carried out by those who are delivering works. Second line is the internal oversight functions, and third line is independent assurance. And really, risk management, embedding risk management into the process and into the project, really supported that first line. As a functional lead for risk management on this project, I really sat at the second line with an oversight function, and setting policy and procedure and sort of monitoring performance. And then the third line, as I say, independent assurance. We work very closely with our internal audit, external audit, with sponsors representative, and a group which was brought together all the other independent assurance organisations across our integrated assurance group, and work very closely really with those organisations to provide assurance really. And a lot of the sponsors particularly and funders really found it very important that Crossrail understood what its risks were and was managing those risks and could evidence that it was managing those risks. So so we were quite successful to evidence that. And that slide really just talks a little bit about how we engaged at each of the different levels, embedding risk into the organisation, measuring and monitoring the process, but also reporting up and out to all the different assurance organisations that were interested in our performance. So it's a very high-level summary, really, of the risk management work that we did through the development and delivery phases. The programme is now into its systems delivery and looking very much forward into the systems integration and really looking at the opening stages. And this is a little graphic that talks about the different opening stages of Crossrail. The risk process is now sort of pivoting to focus more on the railway opening aspects and the railway opening risks, with the first stage being early next year in terms of getting the new rolling stock onto the northeast section. So I guess to wrap up, risk management has been a key part of the way that Crossrail was delivered, starting from a very strong foundation prior to 2009, risk management techniques really able to inform the project governance and the sort of agreements that the project had with its different stakeholders, and also informing the funding settlement and the controls, the intervention points put around the funding, which gave sponsors some confidence that we were able to keep on top of costs. But also post 2009 in the delivery phases, as I say, we had tremendous support from the senior team, from the executive and the board, and we were able to embed our processes into the organisation. Risk management, as we've already said, this really comes back to our mission statement. It was built on good engagement with delivery, which I think we achieved. It's provided assurance that Crossrail was delivering the right outputs, and really to all those sort of internal and external organisations seeking assurance, risk management was one of the areas they could look to gain that assurance. But we also, I think, from having a good process and good information, we were able to inform some of the key decisions that we made along the way. So, as I say, that's the risk management piece. All of this information is available on the Learning Legacy website. I think a lot of the risk management processes and procedures that we developed that I've talked about along the way are already up there. I think some of the example reports, and there are some further information, so well worth going and having a look for risk management and other aspects of the project. I think we've got a bit of time now for questions and answers, so if I can hand back to Rachel, who will field that.
Thank you, Rob. Joining Rob in answering your questions today is Richard Bolchinski, Head of Programme Controls at Crossrail. Our first question is, how were the benefits calculated, and are these impacted by Brexit? Does that change any of the strategic risks, for example, Rio?
I'm not sure about the last. I'm not sure I quite understand the last part of it, but certainly, you know, as I said already, Crossrail was sort of 20 years in the development from the late 80s, early 90s, and finally getting the go-ahead around 2008, 2009. There's an awful lot of work doing to look at the line of route and optimise that. And Department for Transport and TfL have very complex models for modelling the benefits on this kind of project. The £42 billion number, I think I'm right in saying, is primarily economic benefit due to improved journey times and improved accessibility. So it doesn't include any aspects of sort of property price increases or anything like that. And as I say, through the sort of 20 years from 89 to 2009, a lot of different lines of route were considered, and this one that we are now delivering was the best from a business case benefit. I think I'm right in saying that the business case was the best, or one of the, for this size of project that has ever been put forward in the UK. So it's it's really, the short answer is a very complex model taking on board factors like journey time and access and sort of improved access to different journeys. I don't know about that question. I suspect nobody quite knows about that, but yeah, a pretty solid business case, which which the project delivers.
Okay, thank you, Rob. Next question: how do you get project teams to own their risk registers?
Right. Okay. So I think there's some ingredients that I've mentioned all the way through the presentation. That, one of them is sort of this whole tone from the top thing. We had very good engagement from the senior team, and really they made it important for the project teams to know their risks. They challenged the project teams on their risks, and they sort of emphasized the importance of the project teams owning their risks. I was the sort of head of risk management for, as I say, several years through the project, but I was always very clear that I was not owning the risks. That those risks are owned by the account managers, and it's really just a sort of drumbeat and a consistent message with a bit of help from the senior team and a bit of focus and the occasional challenge, and really just putting ourselves in a position where we can support the teams. That I think we managed to achieve that.
How did you decide what to allocate to the supply chain?
What I've tried to highlight in the early stages of the project and in the sort of development stages was that there was some real good thinking done in the early stages at the quite strategic level to understand what risks were inherent in delivering this project, and to really look at different allocation models and to assess the sort of efficiency and effectiveness of those allocation models. So there's a lot of thinking up front in that. Then sort of in terms of having developed a sort of high-level strategy, each different asset class had its own procurement strategy, and at each asset class level there was again a really good consideration of what the risks were, what risks we felt could be transferred to the supply chain, what risks we felt were reasonable to own by the client organization. And then the next level down then is at each contract level. Each contract we went through the procurement process on our side, through the invitation to tender, and immediately prior to award we went through really detailed and thorough risk assessments and quantitative risk assessments to understand the detail really of the risk that we were passing to the supply chain. And in some cases, we, as a result of these exercises, we ended up changing the risk allocation and modifying it. Particularly, one of the key areas was in interface risk, where we realised quite quickly, or getting into the detail, that that it was going to be uneconomic to try and pass interface risk into the supply chain. And that was probably best and most efficiently managed by the client organization. So really, I would say 3 different levels of thinking: the sort of pre-delivery in terms of fleshing out the big picture that I've tried to highlight in the slides, and then through the procurement sort of strategy and then procurement process, really getting into the detail, and doing detailed risk assessment and having the commercial team really engaged in that, and using that to to determine and to influence the contracts that were ultimately let.
Next one: how did the QRA process work at the ITT stage? Were the contractors involved in the QRA workshops?
Right. So the answer is no. The short answer is no. So Crossrail adopted a procurement process whereby we accepted contractors' bids. We did not engage with them prior to the award of the contracts. It was a single stage tender process essentially. We did not engage with them prior to the contract award. But what we did do is that internally we allowed for areas where we felt that they may have underestimated the risk or misidentified the risk. So it was an internal process. We had project teams set up to as part of the to develop the designs and to let the contracts, and so they were the ones that were involved in the QRA prior to award, and then post award, then we got into more detailed discussions with the contractors about the extent of the risk they were carrying. But no, the short answer is that the prior to a contract award, that this was an internal Crossrail exercise and the contractors were not involved.
How did you identify risks, and how far in advance do you look at risks, for example, station opening risks? Were they identified back in 2009, for example?
Yeah, so it's an interesting question. I mean, Crossrail is in part a major civil engineering and construction project, but also, and we're getting into this phase now, is also a railway project. I think most people are aware of the risks of new railway projects and new railway openings, and sometimes they don't go quite as well as they might, and we've probably all experienced disruption and delay. So I think even from the outset we understood that there was going to be those different categories of risk that needed to be considered. Clearly at 2009 we had high-level risk statements, if you like, high-level risk assessments, but a little bit like the rolling planning process that Rob Little described last week, we tended to sort of explore risks and really get into detail on a rolling basis, probably looking a little bit further ahead than the detailed schedule, but looking sort of two years ahead, 18 months ahead, and really trying to identify and flesh out what the detailed risks were. So we did have high-level assessments at the outset for these risks, and we knew that they were there, but the detail sort of came later and is still being developed. And the detail now about the detail openings, really getting into the sort of almost day-by-day planning now about how those openings, how the commissionings and openings are going to happen. So it's really a kind of rolling process, but it's important at the outset when you go into the sponsors for a funding settlement that you understand that these risks exist and that you ensure that you have some cover both in cost and in schedule for the risks that you know are out there.
How many dedicated staff were required within the client organisation to deliver this?
Okay, so it kind of, as you might expect, it had a profile to it, and the profile pretty much followed the spend of the project, if you like, or the amount of work that was being delivered at any one time. The team peaked, I think, in 2013, 2014 at around 15 people. So this is risk professionals, a mixture of what we called risk analysts and risk managers, albeit they were all pretty responsible and capable people and doing quite responsible roles. But around 15 people, I think around 9 of them working in around the central section and the central section delivery, about 4 I think working at program level, looking at the program integration risks, systems integration and program management, and then I think a couple more, one on the rolling stock and one looking specifically at London Underground and the interface risks that I highlighted at the outset. So I'm not sure if my math is quite right there, but it's about 15 people at the peak, but obviously it ramped up and down around the sort of the amount of work that was being delivered.
I would simply add to that we're not far off that right now. I mean, Crossrail as of today has just under £2 billion left to spend, and we have 12 people. So for people trying to figure out orders of magnitude as to sizes of teams versus expenditure, that's our current number, 12 people for £2 billion worth of work.
Excellent, thank you. The next question, what methods have you used to transfer risks?
As I said, lots of good thinking in the early stages of the program, to think about the risks that this project, delivering this project, presents. Crossrail Limited, that's the organisation that we call Crossrail, really was set up as a risk-bearing vehicle. It really carried all of the risks in terms of delivering the project. There were only a couple of exceptions whereby Crossrail had a recourse to the sponsor's organisation. So we start from a position where Crossrail, the client organisation, carries almost all of the risk. Really, then it's a case of looking, as I've already described, at the different organisations that sort of work as partners to Crossrail. So industry partners, those are Network Rail, London Underground, Transport for London, and also delivery partners. Canary Wharf Group delivered a significant piece of work here in Canary Wharf, which is the new station there. Berkeley Homes also involved. So really sort of looking, again, a piece of work at allocating the risks out, and really just starting by identifying the categories of risk that each of those organisations may take, doing some assessment of the significance, and in some cases that might be a quantitative assessment, and really just doing some assessment of where those risks are best placed. And then in terms of the risks that Crossrail Limited then was left with, if you like, then we get into the discussion, as I've already talked about, with the sort of establishing the supply chain and understanding from a big picture, how we were going to deliver the job in terms of where the risk would start to sit, and then through the procurement strategy and ultimately to contract strategy. So I think it's just a case of doing the thinking, really, and having the discussions, in some cases using quantitative techniques, and there were cases where we did sort of quantitatively assess different approaches, and in doing so we were able to select approaches which were more efficient or less efficient and identify the best route forward. But it's really just doing the thinking, but also, as I sort of tried to say at the outset, all coming from our detailed understanding and knowledge of the risks which the risk management process had given us. So it's not a sort of an ancillary exercise. It's very much based out of the understanding of risk that we hold as an organisation. So hopefully I've done a reasonable job of answering that question, but I'm not entirely sure that.
Well, I would offer a much shorter way of explaining, to simply say it is not part of our delivery strategy to deal with the risks we've got by offloading them onto other people. We recognise the risks that we've got, we own the risks, and we figure out ways to resolve them.